Okay, let's talk about one of the biggest financial questions we ever face. How much does that dream home or that new car actually cost in the end? Today, we're going to pull back the curtain on the true cost of borrowing. And I'm going to show you a super simple tool that will completely change how you see your money. So let's just dive right in. You've found the perfect house. You know the price on the listing, but what's that hidden number? What is the real total cost you're going to pay after decades of payments? How about this number? $390,000. I mean, just look at it. That's a huge figure, right? For a lot of people, that's more than the price of the house itself. It could be a whole separate investment, a college fund for a couple of kids, maybe even an amazing retirement. But for a lot of homeowners, it's something else entirely. Yeah, that number, that's the hidden price tag. It's the interest you pay on a loan. It's honestly one of the most important financial figures in our lives, but it's one we often just overlook. So today, we're going to make it visible. Think about it. We're all trained to look at the sticker price and the monthly payment, right? But the real story, the one that can sneak up on you, is this invisible cost. It's the interest, and it just quietly builds up over the years, massively inflating what you end up paying. Understanding this before you sign anything is the key. So, how in the world do you fight an invisible cost? Well, you make it visible. You need some kind of financial crystal ball that can actually show you the future of your money. And that crystal ball is an investment interest calculator. I know, it sounds kind of technical, but trust me, it's not. It's a really simple tool. You just plug in a few numbers, and it gives you this powerful peek into your financial future. All the guesswork, gone. To really see how this works, let's make it real. Let's walk through a scenario that, a lot of people are facing right now when they're trying to buy a home. So let's meet Sarah. All right, so Sarah is 32. She lives in Austin, and she's found her dream home. It costs $350,000, and she's done an amazing job saving up. She's got a 20% down payment, $70,000 ready to go. So after she puts that down payment on the house, the amount she actually needs to borrow from the bank, that's called the principal, is $280,000. Okay, so the bank offers her a fixed mortgage, and the interest rate is 7%. This is a pretty standard rate that a lot of people are seeing these days. And the loan term, the amount of time she has to pay it all back, is the classic 30 years. So we've got all the pieces of the puzzle. Which brings us right back to that big looming question. With a $280,000 loan at 7% interest for 30 years, what is Sarah really going to pay for this house? And the calculator reveals the jaw-dropping truth. Over the life of her loan, Sarah is going to pay $390,593 in interest alone. Get this, that's over $110,000 more than the amount she even borrowed in the first place. Just let that sink in for a second. But wait, here's where it gets even crazier. Look at how her payments are broken down in just the first year. Of the more than 22 grand Sarah pays, only about $2,900 actually goes to paying down her loan. The other $19,500? Pure interest, straight to the bank. This is why it feels like you're just spinning your wheels in the early years of a mortgage. You are, because most of your money isn't even touching the principal. Now, seeing a number like that can be a real shock to the system. I get it. But this isn't meant to discourage you. It's meant to empower you. Because knowing this stuff, it changes the entire game. So why does this matter so much? Well, for one, you can budget with your eyes wide open. No more nasty surprises down the road. It also unlocks the incredible, almost magical power of making extra payments. And maybe most importantly, it puts you in the driver's seat, letting you compare different loan options to see which one is actually the best deal. Okay, now watch this. Look at the insane impact of a small change. If Sarah just pays an extra $200 a month, she shaves 7 whole years off her mortgage. And even better, she saves nearly $100,000 in interest payments. That is a life-changing amount of money, all from a pretty small adjustment to her budget. Feeling a little more powerful? You should be. And the best part is that using one of these calculators to take control is so simple. It's really just 3 easy steps. First, you pop in your principal. That's just the amount you're borrowing. Second, you add your interest rate and the term, the length of time. And third, boom, you click the button and discover your financial future. You'll see the total interest, a full payment schedule, everything. It's that easy, I promise. So what's the bottom line here?
What's the one big thing you should walk away with after all of this?
It really boils down to this. Knowledge is power. But when we're talking about finance, that knowledge literally is money. Understanding how interest works isn't just for bankers. It is absolutely fundamental to building wealth and making smart decisions for yourself.
So, that just leaves one final question for you. Whether it's for a mortgage, a car loan, your student loans, or even just your retirement savings, what financial future are you going to uncover first? The tool is out there waiting for you, and now you know exactly what to do with it. Thanks for tuning in.